So Canada's top banking regulator just dropped their fall risk outlook, and honestly, there is some stuff in here you need to know about. OSFI, that's the Office of the Superintendent of Financial Institutions. They're basically saying, yeah, the banks are fine, but borrowers, you're about to feel some pressure. Let's talk about what that actually means. So here's the headline. Canada's lenders are still strong. They can handle what's coming, but here's the thing. What's coming is not great. We've got trade tensions brewing, unemployment ticking up, and housing markets, especially condos in Toronto and Vancouver, looking pretty shaky. So the financial system itself, solid, but everyday people with mortgages starting to feel the squeeze. All right, let's get into the actual warnings OSFI laid out. First up, tariffs. All this uncertainty around trade is making people nervous. Consumers are hesitating, businesses are holding back, and when people hesitate, lending slows down. Investment stalls. It's a ripple effect. Second, housing activity is still below the 10-year average, and here is the kicker. Delinquencies are creeping up, especially on those fixed payment variable rate mortgages. We are getting close to pre-pandemic levels again. And third, this one's huge, almost 1/3 of all mortgages in Canada are still coming up for renewal by 2027. Now, yes, rates are lower than they were last year, but if you locked in a mortgage back in 2020 or 2021 at like 1.5%, you are still looking at a really painful jump when you renew. So yeah, rates are coming down, just not fast enough for a lot of people. So what's OSFI doing about all of this? They are tightening things up. They are cracking down on mortgage underwriting, how lenders approve loans. They're scrutinizing appraisals more closely. They are watching loan-to-income ratios like a hawk. Basically, they are telling lenders, don't get sloppy, don't overvalue properties, don't push too hard on those variable rate fixed payment products. What they're really saying is we are protecting the system, even if that means it's harder for some people to qualify. So what does all of this mean for you? If you are renewing soon, expect a closer look. Lenders are going to dig into your income, debt, your property value, all of it. If you are buying, don't be surprised if your appraisal comes in lower than expected, especially on condos or investment properties. And if you've got one of those fixed payment variable mortgages, check your statements. Your principal might not be dropping the way you think it is. Here's the emotional reality. A lot of people are feeling what I call quiet financial anxiety. Like you're managing, you're holding on, but it doesn't feel like things are getting easier. You're just waiting for relief that keeps feeling just out of reach. The system's stable, sure, but for a lot of families, it doesn't feel stable. OSFI's message isn't all doom and gloom. What they're doing is prevention. They're making sure lenders don't get reckless now, so we don't end up in a bigger mess down the road. But for you as a borrower, this is your wake-up call to plan ahead. Review your mortgage early, stress test your own budget, like actually sit down and do the math, and then talk to a broker or advisor about your mortgage renewal or refinance options before you're up against the deadline. Because in this market, preparation is honestly going to be your best protection. If this video was helpful, go ahead and subscribe for more breakdowns on Canadian real estate, talk on the housing market, and cool mortgage strategies to help you pay your mortgage off faster. If you enjoyed this video, you're gonna love this one as well.